We're going to move now onto a related topic, and it's something that's only recently been announced, but will have major implications for investors right across Europe and beyond. To tell us more about the EU platform on sustainable finance, please welcome its newly appointed chair, who is also the PRI's Chief Responsible Investment Officer, Nathan Fabian. Nathan.
Good afternoon. The European Commission has launched a new platform on sustainable finance. The platform responds to the urgency of the sustainable transition by establishing a permanent public and private sector expert panel to develop sustainable finance policies and tools. The platform's mandate includes further development of the screening criteria for the EU's sustainable taxonomy, as well as a review of potential social and significant harm criteria. The platform has two further objectives: to monitor capital flows to sustainable finance and to undertake policy development on future sustainable finance reforms. For the first time, we will have a platform and the tools to know how much of our capital is sustainable and how much is not. The platform is commencing after 4 years' work on the EU taxonomy, but also more than a decade after standardized sustainability taxonomies were being used for the first time in financial markets. The EU has changed the playing field by casting a taxonomy in a legally binding instrument with mandatory disclosures, as you've just been hearing. This legal instrument sets out a clear framework for the taxonomy and therefore the work of the platform. That the platform exists in this form is recognition that financial markets and sustainability must be integrated from a policy and market practice perspective, and that this should be a lasting change in thinking and approach. The platform will support financial markets to steward and allocate their capital to activities that contribute substantially to Europe's sustainability goals. The EU Green Deal brings sustainability objectives to the core of Europe's strategy for prosperity. The centrepiece is a goal to reduce greenhouse gas emissions by at least 55% below 1990 levels in 2030. This deep reduction target establishes a pathway to net zero emissions by 2050 that is consistent with ambitions to limit warming to around 1.5 degrees, the aim of the Paris Agreement. To achieve the 2030 target in Europe, at least 350 billion euros of energy-related investment alone will be required each year. This is before we consider the finance needs for additional sectors like agriculture and forestry and transport systems, for example. And when we add financing for Europe's other environmental priorities, such as climate adaptation, pollution prevention and control, water system health, biodiverse ecosystems, and a circular economy, we can see that the private financing opportunities for an environmentally sustainable Europe will be substantial. But many of you have been in this industry working on sustainable finance for some time. We know that for investors to have confidence, we need to be clear that we are in fact on the verge of the sustainability transition that we've been anticipating for so many years. If you consider the broader reform agenda in Europe and many countries around the world, it appears the answer is yes, we are. The signals we would look for to make such a judgment could include, for example, explicit environmental goals that align with the science, frameworks to price environmental externalities, clear regulations where price signals do not reflect the environmental costs, mandatory reporting of adverse impacts on sustainability objectives, mandatory reporting of the sustainability performance of the economic activities we invest in. And the list goes on. But I am just describing to you the policy framework that we now have in Europe. If we were under any misapprehension, we should take note. Capital markets are being shown what must be achieved for a sustainable economy. and the changes are flowing into financial market reforms, including in corporate disclosure, passive investment products, financial advice, financial product labeling, investor duties, and of course, the taxonomy we've just been talking about, which is a foundational element. In a time of accelerating change, it makes sense for the EU to establish the Sustainable Finance Platform to support the implementation of Europe's Green Deal and these financial reforms. The platform's 57 experts include representatives from investment, banking, scientific, industry, environmental groups, and civil society. Importantly, the group includes members with direct expertise in many of the economic sectors that must contribute to a sustainable economy. The private sector members are joined by representatives of the European Environment Agency, the European supervisory authorities, including the EBA, EIOPA, and ESMA, the European Investment Bank, the European Investment Fund, and, importantly, the European Union Agency for Fundamental Rights. Now, reflecting the global importance of Europe's efforts, the platform will also include observers from the Network of Central Banks and Supervisors for Greening the Financial System, NGFS, also the OECD, UNEP-FI, the European Bank for Reconstruction and Development, the European Financial Reporting Advisory Group, and the European Stability Mechanism. You can see that the financial institutions of Europe and many of the policy institutions of the world are watching this reform closely. The initial 2-year mandate of the group includes the development of technical screening criteria for the taxonomy, specifically in the additional environmental objectives beyond climate adaptation and climate mitigation. Also, to consider and make recommendations on the potential inclusion of social and significant harm criteria in the taxonomy to give us a much richer taxonomy. Third, observation of capital flows towards sustainable finance. And finally, policy development for future rounds of sustainable finance reform. Now, critical decisions loom for the platform on how the taxonomy criteria can inform transitional finance for economies, companies, and financial portfolios to align with and or to contribute to sustainability goals. Of equal importance is monitoring the development of reporting on taxonomy alignment to ensure that investors with disclosure obligations under the taxonomy and companies with obligations under the Non-Financial Reporting Directive can fulfill their obligations in a meaningful way. In the world of sustainable finance and sustainable business, the platform is a unique and crucial undertaking, not only in European, but also in global terms. If we hope to use the power of markets to respond to the sustainability crises we face, we must provide the tools that markets need to do their job efficiently and in an informed and transparent way. By creating a framework of sustainability performance criteria and creating obligations for financiers and investors to refer to it in their activities, we are ensuring that capital markets consider sustainability factors in an explicit and evidence-based way. Strategies, forecasts, plans to change and invest, targets to reduce environmental impacts are all critical as part of our approach, but they are not sufficient without the evidence of progress towards our now urgent sustainability goals, and the work of the platform can support this tangible work. It would be possible to see these changes as only a European phenomenon, but that would not be true. Just last week, the International Platform on Sustainable Finance, or IPFSF, announced that it would establish a taxonomy harmonization working group jointly chaired by China and the EU. The IPFSF has 14 country members so far, covering 50% of global emissions and 50% of global population. And the members include Canada and India, economies with enormous emissions profiles. The next step is to analyse the commonalities of existing global taxonomies with a view towards setting out an approach on harmonisation. Of course, this must be recognised in the context of the increasing number of countries who are setting net zero by 2050 goals and it is the setting of these goals that now allows our taxonomies to become precise and very useful for investors. But it's important to realise that the taxonomy will already have international reach beyond Europe. All investors issuing financial products in Europe will have to follow the disclosure obligations, and European companies with international supply chains will be likely to seek data from their international suppliers for their own reporting obligations. So the EU taxonomy already has international implications even before the international competition for green finance and the international green finance diplomacy really take off. We know that many investors are already preparing to implement the taxonomy, and the panel you have just heard provides some excellent examples. What struck me most is the use of the taxonomy within investment processes, that is, to inform investment decisions on environmental performance. Now, while the legal obligations focus on disclosure for financial products, it is the use of the taxonomy within investment processes for fund strategies, for allocations, for stewardship activities that is so encouraging and shows the potential of the taxonomy to advance responsible investment practice and our sustainable economies. Now, to find out more about the platform and the taxonomy, you can search for EU Platform on Sustainable Finance, where you'll be able to see the members and more details on the work program. Now, in my role as chair of the platform, I will continue the science and evidence-based approach of the work done to date. I'll ensure that the platform communicates clearly to the market about the work it is performing and is open to receiving feedback. We will also make sure that investors have the right data at the right granularity for the right issuers to undertake the taxonomy analysis in future. We'll provide more guidance and clarity about expectations for taxonomy disclosures to support investors and companies with their implementation efforts. And importantly, we'll continue with the ongoing development of the taxonomy to support efforts to harmonise with international efforts we are now seeing. In closing, let us reflect. Europe's political leaders have clearly stated that an economy that works for people is the fundamental concept to underpin European prosperity in line with the Green Deal. If the platform members and we as responsible investors do our jobs well, we can ensure that the financial wealth of citizen savers, both those of Europe but also those from around the world, are invested in an economy that will continue to provide returns as we meet our environmental and social goals and transform our economies. This in turn will support companies to invest and accelerate the transition we know we need. Ultimately, we, by working together, can ensure that the economy of the future is aligned with the realities we now face on environmental and social challenges, and we can respond to the urgency we know we must for a sustainable transition. Thank you very much.